All right. Back in the action once again. Time to get back to work here, guys and gals. It's about that time of day again, after all. It's Tuesday evening. It is December the 10th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you find the best levels of support and resistance for tomorrow, the best entry setups for tomorrow, and most importantly, how to avoid all those common rookie mistakes in tomorrow. That's Wednesday, Fed Day's trading session. And we have quite a bit to talk about tonight on the video. We're going to grab the calendar because in case you missed last night's newsletter, got a bunch of news setting up for tomorrow's trading session. And then, of course, we'll grab the charts. Got a lot to cover on the charts tonight. The charts are a little bit squirrely ahead of some news coming up later this week. We'll grab the crude oil, the gold, the S&P, the Nasdaq. I'm going to jump in first tonight, though, on the black gold, that Texas tea, the crude oil futures. Oil went up, went down, but it finished up the day once again inside of a range. Now, there's a couple different variables of this range, and I want to make sure you're ready for it before you go trading tomorrow. That's Wednesday's trading session. Let's grab that oil chart. I want to make sure you see both of these trading ranges because there's a lot of moving pieces on this chart, and with some big news tomorrow, I just want to make sure that you are prepared, right, for battle tomorrow morning. Now, of course, as you can see on the oil chart right now, there is an overall bullish tone to the market. We continue to assume those buyers are trying to go back up and retest those big highs and possibly up around that big round number. So we know there is a very subtle overall bullish tone. We keep seeing these buyers defend all this area, and we're anticipating that more buyers are probably going to be trying to buy low or in the low of this channel. What is very interesting and could be very challenging for tomorrow is the way we have some ranges on this chart. You'll notice I've got one range marked up here, and I've also got that previous range from yesterday and Friday's trading session. Now, range-bound markets are big clues. First of all, the short-term trading range tells me to be looking for buy setups underneath that range low. Now, that seems to fit nicely with the idea of buying off the low of that channel. So that's a good strategy, and tonight we'll talk about a couple good setups I'm watching for to be buying off of that low. But at the same time, though, it's a little bit difficult not to see that this could really be lining up into kind of one bigger range here. You can kind of see how it's going sideways here. So with that bigger range comes bigger pullbacks, bigger potential breakouts, right? Like we saw back here, So we may indeed see a much stronger pullback here on the crude oil, and I want to make sure you're ready for that because I don't want to chase it if it tumbles here. If it does tumble, we're still looking for some buy setups, but now that momentum as it pulls back will cause me to look for different entry patterns. So tonight we'll talk about the difference here. We'll talk about the shallow pullback in the first battle zone, but we also want to be ready for that deeper pullback as well, so you're mentally ready for that if it does make a run going lower. Now, that's only half the battle. If they don't give us that pullback and we run higher, I've got to worry about this overhead resistance, right? I know we've got our eyes on the highs. I know that big round number is an easy target for the buyers, but how exactly do I structure a trade if I'm trying to buy as this market's going higher? I've got two very distinct, very simple patterns we'll talk about tonight, right, to look for that breakout going higher and to make sure you use the right entry setup so you're going to capitalize on that move higher. And then you know what? We get some big news tomorrow. I'll also talk about how to sell off of the highs, possibly later on in the session tomorrow. There may be a nice short off the highs later in tomorrow's trading session. And we'll also talk about if this thing really turns into a bloodbath. We'll talk about how to qualify the short and what to look for those short selling opportunities if we get them tomorrow. So if you're an oil trader, There's a lot to really notice on this chart right now. I'm going to put together a nice roadmap for you guys and gals for tomorrow's trading session. And we're going to dig into that here in just a few moments. Over on the S&P. The S&P, I think, is relatively easy to see. We have a bullish market up. That bull market pulls back and retests the high. Now, once it retests the high, anytime we see a strong move in one direction that then goes back and retests its extreme, it's almost like a stamp of approval, in this case for the buyers. So even though we saw that strong move down at the beginning of the session, when they got that move up, they came back and kind of tapped that high right there. That's kind of the stamp of approval now. Okay, buyers definitely have control. Buyers definitely have momentum. Well, they didn't really do much with it, as you can see, because the market kind of went to sleep on us, as you can see right around kind of where the day began. This is where the range comes into play now. So now we see the range start to come in. So we know we get a bull bias, and we know we're in a range right now. Range-bound markets tell me to buy low, sell high, and avoid the middle. That bullish bias tells me I want to buy these dips. Now you might notice here, we've already had that dip. So right now, I'm really anticipating really 3 scenarios, maybe 4 scenarios, to be honest with you. One would be a continuation up to those highs. The other would be a move up and a sell back down. And then, of course, we've got 2 more. One would be a shallow pullback, and the other would be another leg lower. There are really 4 different scenarios I want to be ready for here tomorrow. We're back inside the range. I don't want to do anything inside the range. I call that my no trade zone. So I'm wondering right now, are we going to make a run going higher, or are we going to sit inside this range, go up so I can sell it back down again? Or will we make a nosedive back down so I can buy it back up? These are all scenarios. We're going to break this down and slice and dice this tonight so you're ready for everything in tomorrow's trading session. We'll grab a look at the S&P in a lot more detail here in a moment. Over on the Nasdaq tonight, Nasdaq obviously looks a lot like the S&P. We've got that strong move up, that pull back, that stamp of approval, as I always say. And then, of course, we got that trading range, right? Now, this range has a bullish tone to it. Anytime we have a range with anytime period, there's a range on here. Want to buy low, want to sell high. With that momentum being so bullish, I want to buy underneath this range, stay out of the middle. And as we go higher, I've got 2 breakout patterns I'm watching for, because those buyers have an eye on that measured move overhead. But at the same time, though, it's a range. So I also want to keep an eye out for a short off that high as well. So as you can see, the Nasdaq's in a very similar situation to the S&P. There are a lot of different opportunities setting up for tomorrow. I want to make sure you get your hands on the right ones. And tonight we'll talk about the best entry patterns to buy low. I'll talk about how I want to sell in a bear market or in a bull market, and how to qualify a breakout, how to trade that breakout. We'll talk about all of those details tonight on this NASDAQ. And then, of course, last but not least, we got the gold. I mentioned earlier the markets are a little bit squirrely right ahead of this big news tomorrow. We'll grab a look at the news here in a moment. And the king of the squirrels, right? The king of the squirrel kingdom tomorrow is going to be gold. Gold is definitely going to be something we're going to pay attention to tomorrow. Tomorrow with a big news event tomorrow right around the corner. It's going to get a little bit squirrely here tomorrow, but as you can see here, we've got a triangle on the chart. It looks like that triangle will probably be our best friend for tomorrow's trading session. Anytime I see a triangle, I always know I want to buy low, I want to sell high, and I do look for breakouts. There is one very important part of a triangle pattern that tells me when and where to look for a breakout. We'll talk about breakout patterns as well, but it's a range right now. It's pretty obvious to see. It's a trading range environment. We're back and forth, back and forth. I want to buy this thing as it goes lower. I want to sell it as it goes higher. And tonight we'll talk about some of the entry setups we're looking for to buy low, sell high, and obviously breakouts. And I'm going to warn you right now, it'll be a lot easier to trade a bullish breakout than it will a bearish breakout. If you watched last night's newsletter, you probably know why. If you don't know why, right, make sure you stick around for tonight's video, and we'll talk about why being a buyer on this market will be a whole lot easier than being a seller. So as you can see, we got them all ready to go here, all lined up. Gold is here. Got the Nasdaq, the S&P, and of course we got the black gold, the Texas tea, the crude oil futures. We're going to break this down into small bite-sized pieces tonight. Before we do that, though, I just want to make sure to remind you to join our mailing list. So head over here to sidewaysmarkets.com and join our mailing list. Now, if you're on the YouTube channel right now, I'll put all the links for this website in the description of the YouTube video. If you're right here on the blog already at Sideways Markets, just hit the logo in the upper left-hand corner and then go right back to that homepage. And all I need is your first name, a real email address, and then hit that subscribe now button to make sure you join our mailing list. That way, you'll get an email from me every time this nightly newsletter goes live. In fact, I send out this email before I publish the video on our YouTube channel. So if you want to make sure you never miss a great video newsletter, if you want to be the first one every evening to get your hands on this video newsletter, make sure you join our mailing list. And just a quick heads up on this, when you subscribe to join our mailing list, I'm going to send you a welcome email. That welcome email oftentimes gets stuck in your spam filter, so make sure you check your spam filter if you don't see the welcome email. Inside that welcome email is a bunch of great free resources to thank you for joining the list and a verification link that I need you to verify. So join the mailing list, check your email, check your spam folder. Oh, and one more thing too. How about some questions for tonight's video, especially for all the new traders out there? If you have any questions about anything we talk about tonight, terminology, patterns, mindset, technology, anything that we talk about tonight, please don't be afraid to put those questions right in the comment section below. In fact, while you're watching here tonight, I want you to be thinking about an important question I have for you, and that is, what do you think in your mind, what is standing between you and becoming consistently profitable? I'd like to know the answer to that question. Is it the right mindset? Is it the right trade room? Is it better charts? Is it better setups, better trade management? In your opinion, where you are in your trading journey right now, what do you think is the biggest obstacle standing between you and becoming consistently profitable? Let me know in the comment section below. And while you're down there, give me that great feedback so I can keep making this video better. Do me a huge favor, will you? And hit that thumbs up button for me. Because believe it or not, every time you guys and gals hit that thumbs up button, YouTube helps to expose this video to other traders who would love to learn this trading strategy as well. So thank you so much for hitting the thumbs up button for me. Drop those questions in the comment section below. And again, what's standing between you and becoming consistently profitable? I'd love to know what's on your mind and how I can make this video a better serving for your career by dropping those notes in the comment section below. And then don't forget, guys, I'm always here to pick up the call and answer all your questions. If you guys have any more detailed questions, or maybe you want to call the office and learn more about membership or our free passes to our trade room, our free trading classes, call that toll-free phone number. Use that live support tool. My wife, Megan, and I are always here standing by to help you guys and gals. So don't forget, call that toll-free phone number. I'm looking forward to picking up the call, answering all your questions. That way you don't have to go out there into Google and YouTube land and search around out there. You can get the information you need with only one phone call. In the meantime, let's jump into the video tonight. Let's first start off, though, with our calendar for tomorrow. Now, as I mentioned in last night's video, we've got a very big news kind of next couple days are going to be really, really busy. Wednesday, of course, is tomorrow. We get some big news tomorrow from a CPI report at 8:30. We get the big news for oil traders, the petroleum status report at 10:30. And then obviously, right, that FOMC announcement that we talked about last night is coming in hot at 2 o'clock Eastern tomorrow afternoon. As you can see, these markets, they're going to get peppered tomorrow with a bunch of news. We start off with what I think is possibly the biggest news, well, outside of the FOMC announcement, of course, but I think that CPI number is going to be a pretty big market mover tomorrow morning. Usually the CPI number is really good for markets like currencies and metals, right? So gold, euro, Aussie dollar, things like that, right? Now, because tomorrow is Fed Day, gold tends to be a little bit subdued on Fed Day, so we may not get as much of an impact from that CPI number, but that's not going to keep me from trying. So I'll definitely be at my desk early tomorrow, getting charts prepped up, making sure we're ready to hopefully capitalize on some big movement at 8:30 Eastern time from that CPI number. Also, don't forget the petroleum status report at 10:30 on Wednesdays as well. This is really kind of the most difficult time to be trading oil, between 10 o'clock and about 10:45 Eastern time. So keep in mind, oil is a great market. I love trading oil, but from about 10:15 to 10:45 on Wednesdays, oil's a real pain in the butt. So I tend to stay away from oil. I don't recommend trading the news. News is completely unpredictable and it can be deadly to your trading career. So I would recommend stay away from that news. I know it's very tempting to want to jump in and ride that momentum, but the problem is that you've got to guess. You can't just chase after it, right? It's a very difficult environment. I always recommend, especially for all the new traders out there, there are so many reliable times to trade every week. That is not one of them, right? Not Wednesdays at 10:30. Now, again, this only applies to crude oil, but if you like oil like I do and you trade it every morning in the trade room like we do, it's important tomorrow to understand 10:15 to 10:45. Be careful, right? Be careful. I'll be sitting on hands trading other markets during that time. And then we've got the big news of maybe the week, right? Maybe the week. We're expecting to see some good retail sales on Friday, but it's tough to say there's anything more important than the FOMC meeting announcement tomorrow afternoon. Now remember, this has a big impact on the entire trading session. This is one of those news reports that everybody will wake up tomorrow morning and immediately their eyes go right to 2 o'clock in the afternoon. So again, you got to expect gold and currencies, really anything that is impacted by the US dollar is likely going to be subdued tomorrow. Nervous, a little squirrely, as I said earlier, because, well, even though we don't expect the Fed to raise rates or cut rates, it's one of those announcements that people are going to trade around, right? They're not going to gamble around that FOMC meeting announcement. So if you're a gold trader, just be aware of that tomorrow. Hopefully, again, we've already heard from the Fed about a month ago, and they made it pretty clear they're not going to touch rates again until 2020, if at all in 2020. And so I don't think people are going to be too wrapped up in this announcement. But you know what? There's always an exception to every rule. We will have to respect the volatility that comes with tomorrow. So be careful, right? Most important thing that I always try to communicate on the FOMC announcement days is get to the trades early. In the afternoon, it's very unpredictable. It's almost impossible to trade after lunch before 2 o'clock. So you really got to head off to lunch, 11:15, 11:30, come back for the announcement, and then maybe by 2:30, 2:45, when the dust has settled, but then you're trading to the tail end of the day there. So I always recommend to my clients, get in early, right? Get to bed a bit earlier this evening. Get to your desk a bit earlier. Look for those setups a little bit earlier tomorrow. And really, as of 11:15, 11:30, go to lunch. You're more than welcome to come back and watch the fireworks. But just be careful trading the reaction to the FOMC meeting announcement. And again, I realize that a lot of these big news events, they will move these markets. But remember, we're not optimizing for moves. We're optimizing for reliability. And trading during major news events is the least reliable time of the week, right? Not to mention, those big swings can blow your account, right, as fast as they want. So it's very, very dangerous to be trading around them. So steer clear of those. Get to it early. get out of there early, right? And then again, come back and watch the fireworks if you want, but just be careful trading tomorrow afternoon. Now, speaking of tomorrow afternoon, as I mentioned in last night's newsletter, unfortunately, I'll be out of the office tomorrow afternoon, and I assume I got to go back and forth to some meetings here in Los Angeles. If you've ever been in LA traffic, you know that's very difficult to get anywhere quickly, right, in the middle of the afternoon here in LA. So I'm anticipating tomorrow I will not be back to my desk early enough to get tomorrow's video out. Unfortunately, it is that time of the year where you've got to get all your meetings with your bookkeepers and people all put together for the end of the year here. We are going to that here this week as well. So there'll be no newsletter tomorrow night. I hate to even say it, right? I hate even saying those words, but unfortunately, I will not be here with you guys tomorrow night. I will come back though. I will make sure I come back. I'm not going to go that far. We'll come back and we'll do another video. Not tomorrow night, unfortunately, but on Thursday evening, so you're ready for those retail sales on Friday. So again, no newsletter tomorrow night. I'll be back on Thursday evening to make sure we finish up right this week on a good note here on the video newsletter. All right, so now you guys know the plan for tomorrow. Early in, early out, enjoy the fireworks, but try not to lose a finger tomorrow afternoon, right, as those bottle rockets go off from the Federal Reserve Bank. Let's jump into the charts here now. Now we know what we're looking at here for tomorrow's schedule. Let's grab a look here now at crude oil. Jumping into oil here, we'll get some oil, some S&P, some Nasdaq, maybe a bit of gold there to finish things up here tonight. The first thing I notice here on crude oil is that we've got this overall bullish tone. In fact, if you were to zoom in on this chart right now, it's pretty easy to see, right? The market went up, it came back down, and you can definitely see it kind of went up, staggered its way higher, and formed this range right here. Now that tells me this is a bullish market into a trading range. Now that bull market into a range tells me, well, range-bound markets always tell me I want to buy low, I want to sell high, and I want to avoid the middle. So I know that I have this trading range. I know there's a bullish bias. And what I like to do is I like to look for buy setups underneath the range, sell setups up above the range. But, since this is a bull market right now, I'm not really looking to be a seller on this. I want to be a buyer more than anything else. So because we're bullish here, again, bullish bias going in, I want to be a buyer. So what I've done is I've taken the size of that range, I've found my buy zones down here, and really what I want to do on this is I want to look for the price to get underneath the range, look if I can see some sellers coming in trying to sell a breakout pullback, and literally buy right into their failure, right? That is the goal with a shallow pullback tomorrow. Again, it's a bull market into a trading range. Range-bound markets tell me to buy low, sell high. I know it's bullish, therefore I want to buy low. And my favorite way to buy low underneath this small range is to basically look for a failed breakout pullback, right? I'll look for the market to make a run lower. As the market pulls back to the moving average, I know that rookie traders are trying to sell that pullback to the EMA. Once I see them commit to that short position, I know the market is a range at the time. I know that range is a big magnet for price, and I'll simply look to buy now right into those stop losses of those sellers. This is a very simple failure pattern. It's, again, think about it like a breakout pullback failure. As the market goes lower, the breakout pullback sellers try to sell off the moving average. When they fail, we're simply buying right into those stop losses. So that's one easy way to look at it. You can also see as I zoom out a little bit, right, it does line up nicely right at the low of that channel that I mentioned earlier, right, in this video. So I like this whole area. I like how we're nice and bullish going into the range. I like if we can get obviously, right, that failure into pullback going higher. Now, where would my targets be on those long trades? Well, we definitely want to make sure we're targeting the other, right, the prior high, and then I will definitely want to leave a runner up into this 60 area tomorrow because that's where these buyers are trying to go. But that's the easy stuff, right? That's the easy stuff. What I really want to bring to your attention, though, is kind of what I think is kind of the big elephant in the room right now, and that is the potential for this being a much bigger range. I really battled on this tonight because I didn't want to assume that everything was inside this range right now, because you can easily see there's a clear range right there. So I have to separate these two ranges, but there's a chance this market may end up committing back into this kind of, you can kind of see it, right? You can see it doesn't look perfect, but you can definitely see there's the range here. They go back here. They kind of bounced around the edges there. So moral of the story is that if this is the bigger range, now how will I know, right? How will I know if that's the bigger range? You'll know it's the bigger range because it'll really make a big run. Now, if it makes a big run lower, what's going to happen? Momentum now will turn for the bears, right? If this thing makes a big run lower, now momentum will turn bearish, won't it? It'll be a very bear market now. But does that change the fact this is still a range? No, it doesn't. It's still a range. And what do ranges do? What goes down usually comes right back up. So even though if we do get that strong move down into my secondary battle zone down here, this is where I do expect buyers are going to try to be nibbling on this, right? Trying to buy nice and low like they have been doing over the past 2.5 trading sessions. The problem is, as the market runs lower, it's going to feel very bearish, and the bears are probably not going to give up without much of a fight. So with that situation, now as we get those breakout pullback sellers, I want to let them try twice now. So now instead of just being a buyer right into their stop losses, I'm going to use a slightly different variation of that pattern, which I call a nested failure pattern. It's the same basic idea. As we get that strong move down, we look for the bears to try once to sell the pullback, try twice to sell that pullback, and once I see those bears take 2 swings at it, now I know where their stops are, and now I can buy that run higher. Now, let me be honest here, or let me dig in a little bit deeper here real quick. If we get a strong move down, moving average comes over, right? We get the 1, we get the 2, we have that, what I call a nested variation of that failure. We oftentimes see this. We oftentimes see that failure into a strong run up into what I call a 2-try trap pattern. Now, this is a really interesting pattern here, and it's basically as the market runs higher, right? As the market runs higher, now the fear of missing out kicks in, right? Now the buyers who didn't dare buy the deep pullback, now they're chasing after it. The problem is we're going to go right back into that range. And what's the number one rule when it comes to a range? Stay out of the middle, right? Stay out of that range. So what's the best way as the market runs higher? The best way to stay out of a range is to look for trap patterns. And that's exactly what I'll be looking for as we go back in. Okay, so 2 patterns there if we get that deep pullback. That strong move down tells me, okay, I still want to buy, but I want to make sure I buy by still respecting the momentum of those sellers. That nested failure pattern will keep you out of trouble on those real deep pullbacks. Now, you're probably asking right now, well, then what does a bear market look like, Joe? If you want to buy this on a deep pullback, what would you want to see for a reversal? Like, what does a bear market look like then if this is still a buying opportunity? A bear market needs to give me a strong move down. It's got to hold a pullback to the moving average, and it has to see a strong jump off the moving average. Okay, that's called a 1, 2, 3 breakout, or in this case, it would also be a 1, 2, 3 reversal. And I use the numbers 1, 2, 3 because it's 1, strong move down, 2, pull back to the moving average, and 3, strong move off the moving average. Now, once we have that on the chart, once we know these bears can prove to us, because again, a lot of times what happens is they'll try once, they'll try twice, and will still fail no matter how strong that move down is. So a strong move down is not enough just to say, okay, it's a breakout, right? Like this one. That was a strong move down. That didn't break out. But see what happens? They try once, they try twice, and then they go back up. See how that works, right? When it's really strong, yeah, they're going to give it a couple good tries, but a lot of times they're successful, and they'll take it lower. Okay, so if we do get those 1, 2, and they run, okay, great. Now, mark up that low. I'm going to mark up that high. I like to mark up that first low too and look for a sell up around what I call a hidden channel. So imagine now, right, we get that strong move down, moving average comes over. Now the sellers, right, they try once, they try twice, but they get that strong move off the moving average. Wonderful. Now let's mark up those lows. Let's mark up those highs. Now I've got my new channel. Again, I like to mark up that low as well because that gives me now my sweet spot. And now I look for that sell off the top of that hidden channel. This is called a 1, 2, 3 breakout, or in this case also a 1, 2, 3 reversal into a hidden channel pullback. And just so you know, that hidden channel pullback, right, that pullback, imagine if we zoom in on that area right now, that pullback is usually going to be a failure into pullback combination setup, which we'll talk a lot more about in our trade room tomorrow morning, right? It's called a failure into pullback combination. So imagine you're zooming in, right, into that area right there, right? It's a buyer failure above the moving average into a breakdown, pull back to the EMA, and run from there. And not to worry, we'll go into a lot more detail on this, right, in our video classes. Okay, so now we know what to do if the market pulls back, right? That's relatively straightforward. What about going higher here? Because as we try to go higher, we've got a big issue overhead. We got that major high. Now, before we try to buy higher here, we have to know where we're trying to go. We're trying to go up to that 59.75. You can also see it's like a measured move too up there. So we have to assume there's a lot of buyers up here that will likely be taking their profit. We have to assume there's a lot of sellers up here that will try to initiate short trades. So as the market goes higher, what are some options for me to buy on the way up to it and then maybe sell it, right, later on in the session tomorrow? First things first, if we do get that strong move up, okay, there are two patterns I always like to look for. One is a 1, 2, 3 breakout. I'm going to mark up that high, and then I'll mark up my hidden channel, and I'm buying the low of that hidden channel. Now, you might not get that in time, right? That pattern might go something like this, 1, 2, 3, and you might be left buying into those highs up there. So just be aware of that, right? If this thing really jumps, right? If it really jumps and runs, what you want to look for then is that 2-try trap pattern. Okay, this will probably be your best bet as the market runs higher. Okay, because this will allow you to capitalize on that move. But most important thing is wait for a strong run higher. So once you get that big strong run higher, again, the ideal pattern here is that 1, 2, 3. That will confirm the breakout, right? 1, 2, 3 breakout. Mark up that high, mark up that low. And again, if I can get it, I'll take that, right? Take that buy off the low of that hidden channel. But again, this pattern may happen too high. So if the market really takes off to the upside, a better pattern would be if it really moves strong like this, look for a 1, a 2, and a trap low. We call that a 2-try breakout pattern. This is a great pattern, by the way. Love this pattern. It happens a lot. We find it across all different types of markets, right? So strong move up, okay? Strong move up, that has that sense of urgency now. We don't want to buy into these highs up here. So instead of buying high, we use a trap pattern. Right? Trap patterns are my favorite entry patterns when I don't want to buy into those highs. Now, fast forward now, right? Let's say we do make a run all the way back up. Can I sell this thing now? How do I sell it off the highs now? I look for a pattern called a crown reversal. So let's say, for example, we do get that 1, 2 trap low, right? We make that run up. And now we know they're at the highs, right? They're at these big highs back here. They're up at the big round number. It's a range. How can I sell it back down again? Look for the crown reversal. We talked about this pattern extensively last night on the newsletter. Remember how it works? You want to see a lower high on the next pullback, a lower low, a trap high, and sell it right back down in. This again is called a crown reversal pattern. We talked about this quite a bit last night. And the key is once they finish off their objective, once they get up into this 59.85, 59.90, we don't have to go all the way to 60, but I do want to see us up in the nosebleed seats up here, at the very least up at 85. Then we look for the pullback. The first pullback fails. Second pullback fails. Trap high, and we're selling it back down again. That's a crown reversal pattern, and that will be our best bet for selling off the high tomorrow. So as the market runs higher here, right, we're going to keep an eye out for that little two-try trap into that crown reversal. Now, there is a potential, too, the market may run higher and go into a trading range. If that's the case, if we do run higher into a range, as always, buy low, sell high, and if we have that bullish bias, it's buy low underneath that range using those failure patterns. Now, speaking of failure patterns, we've talked a lot about failures and nested failures. We've talked about two-try breakouts and crown reversals. You know, I want to give you a lot more information about all of these entry patterns. So here's what I'll do. I'm going to put a link in the upper right-hand corner for you for our free trading course here at School of Trade. If you're new here at SOT, or if you're just here for the first time, or maybe you haven't grabbed that free course yet, make sure you grab that free trading course, because not only will you learn about my favorite entry patterns, but I'll also send you hundreds of examples of how we apply those patterns on our favorite futures markets. So make sure you grab that free course link in the upper right hand corner. If you're on the blog right now at Sideways Markets, I'll put a big red button for you right below me tonight on the blog. So if you're on the blog at Sideways Markets, grab that big red button right below us here on the video. And of course, if you're on YouTube, grab that link in the upper right hand corner to learn more about all of these patterns. But again, most importantly, get access to hundreds of examples of how we apply those setups on our favorite futures markets. Boy, I am excited about oil for tomorrow, but remember, get those trades early tomorrow. Earlier the better, right, on the black gold. Let's keep going. How about some S&P here right now? S&P, of course, is bullish into a trading range. We can easily see that bull move up into that trading range. Now, we talked a lot about this last night, but let me just kind of go over this again. When I have a range and I have a bullish bias going into it, there's ultimately three patterns I look for to trade these. Okay, a range-bound market is what? It's balanced. So I don't want to trade breakouts. I want to fade the breakouts. To do that, what I do is I use the size of that range and I bring it down to create these buy zones underneath. Okay, you'll learn a lot more about this in the free trading course. So once I find my buy zone underneath, now what I do is I look for a failed breakout pullback. I call it a failure pattern. I wait for the market to go lower. I wait for those rookie sellers to try to sell that breakout pullback that I know rookie traders love, because I used to love taking them. They're not very reliable, right? So I know that when we get a bear breakout pullback pattern in a bull bias market like this, the odds are not very good for those bears, and I want to be a buyer as they fail back into that trading range. Okay, that's my go-to setup when we have a bullish market into a trading range. Now remember, we also have two breakout patterns as we go higher. One of them is called a 1, 2, 3 breakout pattern. I'll mark up that high, mark up that low, and buy the low. Like I said earlier, I don't trade breakouts. I don't try to mess with the breakout. I wait for the breakout to hold. That proves to me we have a breakout, and then I wait to buy the pullback. Again, breakouts are not reliable in liquid markets. The second type of breakout pattern is that two-try breakout, that strong move up, that one try for the bears, higher high, two try for the bears, trap low, and go. Again, this is exactly what we talked about in last night's newsletter. These are the three most important patterns to look for around a range with a bullish bias. So back to our chart now. As you can see, we have that bullish market into a trading range, right? I want to buy underneath that range. And if we can get a big move going higher, I'm more than comfortable to buy that breakout, because after all, we assume those buyers are trying to go back up to retest those major highs, right? From, what was that? The 6th of December, not this week, right? That was last week, of course, right? Last week's non-farm payroll report. Now, So we know the bull market, we know the range. I almost forgot. We are watching rollover here this week. My indicators are telling me right now the 12th of December will be your rollover. You'll probably get an email from your broker. Most brokers will fire off an email around rollover time. But please remember though, guys, we're not actually waiting for the official rollover here. We're actually rolling over once the volume rolls over. So when your broker emails you and says, hey, contract rollover, be aware we're on the 1219 contract right now, and as soon as that 0320 contract has more volume, then we'll start trading that new contract. Okay, so your broker will email you probably tomorrow or Thursday, right? Probably not as late as Friday, but you'll probably get some pop-up somewhere, right? Something will fire off and say, hey, rollover's coming, and be aware that we don't need to go immediately to trade the 320 contract. That'll be the next contract and this quarterly rollover on the S&P. We don't immediately now go to that 0320 contract. Once the volume is higher on that 0320, then we'll start trading that 0320 contract. We'll talk more about this tomorrow. I don't expect rollover tomorrow, but definitely keeping an eye on the volume on the 320 contract for Thursday or Friday later on this week. Perfect. So now we know the plan here, right? Now the plan here as we go. We know we have a trading range. We know we have a bull bias to it. We know that bull bias tells me I want to buy underneath the range, with a seller failure. We also know as the market goes higher here, I get those two patterns, right? That 1, 2, 3 breakout into or that 2 try trap. Okay, those are my two favorite patterns as we go higher. Now, I also want to keep in mind, right, with this triangle here, we may also be able to go up, get a crown reversal, and sell off of that high as well. So there are a lot of different opportunities here right now, right, on this S&P. Let's talk about if the market pulls back here for us, because right now we have a great opportunity here. Is that strong move down? Now, that strong move down, anytime we see a strong move in one direction, we're going to probably get a follow-up, right, to go back down again. So really at this point, if the market wants to give me another shot lower, I've got my eyes on that low right there. And again, I'm looking for that same basic idea, right? That seller failure. And then if we have enough space for it, I can look for a failure into a pullback combination. Okay, this is a great pattern here. A failure into pullback combination. Now, we're not going to always have enough space for the failure and the pullback. Right? Sometimes what happens is the market will come down, right? It'll come down, they'll fail, and they'll run right back into the range again, right? That may happen tomorrow. We may see this thing run lower, pull back to that moving average, and then just run right back up into that range. Okay? Now, what if we get a bigger pullback? Now, we talked about this earlier, didn't we? Right? We talked about earlier if we get that shallow pullback, right, on the oil, right? It was a failure pattern off that low. But did you see this triangle forming here? You know, I'm a big fan of triangles on these ranges. So what if this thing really takes a tumble here? Can I still buy this low? I think you still can. But you have to respect that momentum. So instead of just trying to be a buyer on it, what I'll do is I'll let them try once, try twice, and then buy it up from there. And again, remember, a lot of times if we get those really sharp moves, the moving average comes over, the bears try once, the bears try twice, that's our nested failure, but then keep an eye on that strong move up, 1 try for the bears, 2 try for the bears, trap low, and then back into the range from there. This, of course, is that nested failure pattern into that 2 try trap. It's a very common kind of pattern combination. The sellers get stuck trying to chase after that move. The market then snaps back higher. And while it's snapping, we're not chasing after it. We're trying to buy it on the trap low because, as I mentioned earlier, we don't want to trade inside the middle of that trading range. Okay, so that covers the pullback side. Now remember, we don't want to trade the middle. So if we end up back in the middle of the S&P, stay out of the middle of the range. And then what if we keep going higher here? If we keep going higher, I think a lot of it has to do with how the market gets going higher. For example, do we sit inside the range for a while and then make a move up? Because if that's the case, then at that point, I'm going to look for a crown reversal. 1, 2, trap high. I'm going to look for that crown reversal pattern, try to sell off that high, right? If they sit inside that range for a while and then make the run higher, I'm not too keen on just trading a breakout. You know what I mean? But if this thing takes off and runs, right? It doesn't hang out in the range. If it just runs as it's going higher here, now I'm definitely interested in a 1, 2, 3 breakout. Mark that high, find that channel, and buy the low of that channel. I am definitely interested in buying that one, right? I am definitely interested if we see a strong run up, 1, 2, trap low, that 2 try trap pattern. Because again, we know where the market's trying to go. So again, I want to repeat that again. If we sit back in this range for a while, then we make the run up. Now I'm looking for that crown reversal, 1, 2, and then back down again. But if it never takes a pit stop in the range, if it just keeps on running, right? Runs up, 1, 2, 3, breakout, mark that high, mark that low, buy the low of that channel, or, right, we make that big strong run up, 1, 2, trap, and go. Where's my targets as we go higher here? My targets overhead, again, are back up to retest those major highs up around that 31.50. Now, how does the market turn bearish right now? Same idea we talked about for oil. If I get a deep pullback, I'm still underneath this range. So for me to want to be a seller on this, I'm going to have to either sell above the top of the range, or I'm going to have to wait to go 1, 2, 3 break down and then draw my channel there. What I'll probably do in that scenario is come all the way back to that high, mark up that low. There's my sweet spot now, and try to sell the high of that channel. I had a question earlier on YouTube here this afternoon about, whether or not my 1, 2, 3 reversal was part of the Elliott wave sequence. And I'll tell you the same thing I told this gentleman, and that is it's momentum that really makes this pattern work. Whether or not it's part of an Elliott wave sequence, I'm not really watching that aspect of it. What I know is that whenever we see a strong 1, 2, 3, I know the momentum is so strong, the fear of missing out is so strong, the odds are very, very good that when it pulls back to that hidden channel, you're going to see a nice strong sell setup off the highs of that channel. Really, really, no matter where we are in whatever Elliott wave count you have on your chart. So keep it simple here. Wait for the breakout going lower, or again, sell off this high. And again, tomorrow, get to it early. Right? Get to it early, because we know those buyers, right? Or we know the FOMC announcement, right, is tomorrow afternoon. Let's keep going here. Over on the Nasdaq. Nasdaq is very similar, as you can see, to this S&P 500. The one big difference is the S&P is back inside of its range. The Nasdaq is not. There again is a bull market going higher here, right, into that trading range. We know where the buyers want to get to. The buyers, of course, they want to get back up. They want to get back up to retest those highs. Buyers want to get back up to retest those highs. The bears want to get all the way back down, right, to retest those lows. Now you'll notice there's not as much of an obvious expanding triangle here, right, on this Nasdaq. There might be here, something like that might come into play, right? So we can add those trend lines in right now there, right? There's your expanding triangle higher. Right? There's your expanding triangle lower down there, right? So that could easily be some levels to consider here as well. Let's add that on real quick. And then that way we know what we're looking for here, right? It's a bull market into a trading range, right? Got my triangle overhead, little bit of a triangle going lower there. Maybe it is, maybe it isn't, but it's all the same, right? It all puts us right inside that battle zone. So what's the best plan here now on the Nasdaq, right? The best plan, of course, is we've got that strong move going down. So I wouldn't be surprised if we see another leg going lower here. Get those bears to try in at that seller failure, right? And buy it right back up. That is definitely on my radar for the Nasdaq here for tomorrow. If we do end up back inside this range, don't forget at that point, it's just simply a bull market into a range. So we know the best plan for that, don't we? We know we want to make sure we're buying with that, imagine a breakout failure pattern, right? The kind of breakout failure, that, breakout pullback failure pattern. We talked about that earlier. Want to buy underneath that trading range. Okay, if we really get a real deep pullback, watch for that 1, 2, 3 breakdown, okay, into that hidden channel pullback. And of course, a lot of the same strategy here, right, for that Nasdaq. As we go higher, do we sit inside the range for a while, then make the run up? If that's the case, look for that crown reversal off the high. Or do we just run right through those highs? And if we run right through those highs, look for that 1, 2, 3 breakout, mark the high, mark the low, find that new channel. And remember, you want to get into those types of setups before we get up to these highs, right? I can't emphasize it enough, right? If the market just launches going higher, we hear something about trade overnight, whatever the case may be. If the market launches, right, going higher, you're probably not going to get the 1, 2, 3 breakout. You're going to get that 2 try breakout pattern with a little trap low on it. Again, very similar to what we talked about on the S&P. Okay, so really the kind of the big question mark we have right now, again, we are watching rollover on the Nasdaq as well, right? I'm hoping we get another pullback down, get that moving average coming over, get those bears to try and fail, right? Failure into pullback pattern as we go, failure into 2 try trap as we go, right? We're avoiding trading inside of that trading range. And again, I realize I might be talking a different language to you right now. So if you're here for the first time right now, I want to give you a lot more information about all of these patterns, right? Grab that free course in the upper right-hand corner. And then, of course, again, if you're on the blog right now at Sideways Markets, it's linked up right in the description of the YouTube video. Also, big red button below the video tonight on the trading blog. So again, we got a good plan here on the Nasdaq. We know if the market tanks and runs lower, 1, 2, 3 breakout, 1, 2, 3 reversal, selling off top of that channel, pulls back, failure, back inside that range. All right, so Nasdaq's looking good here. Moving on. Wrapping up the video tonight here on the gold, the yellow metal, as you can see here. We talked about this in the introduction. Gold will be probably the most difficult out of all of these markets for tomorrow, right? The term I use is squirrely, right, to describe this market ahead of that big news tomorrow. Be careful on gold tomorrow. Gold will be probably the most challenging out of all 4 of these markets. Now, again, we know we have, right, a bit of a bull bias here into that trading range. So the plan is pretty simple, right? Looking for that seller failure pattern underneath that range. We're also watching for that strong break higher, right? That 1, 2, 3 breakout to mark up those breakouts. We're looking for, and again, we're not buying the first pullback, right? We're buying that second pullback after that 1, 2, 3 breakout, or do we get that strong move up, 1 and 2 trap low, that 2 try breakout pattern? Those are the 3 main patterns we're watching for right now. But let's be honest, all right? It's one big range here, right? It's really just one big range here. Draw the trend line down, draw the trend line up. I think that paints the picture pretty well for us, right? I want to sell high, I want to buy low, and as you can imagine, my favorite pattern in these triangles is a failure pattern. The key to a good triangle is to get this market looking very convincing, right? Get it to run down, get those bears to come over, right? Get those sellers trying to sell off that moving average, and we're buying that failure. We're buying that pullback to go back up into that trading range. Failure into pullback, and then back up into that range. Now, what if we go higher here? If we go higher here, remember, we have all this bullish momentum right now. So as we go higher, if you want to be a seller off the highs of this triangle, that bullishness is the concern. We're now thinking nested pattern. Remember that nested pattern? Let the buyers try once, buyers try twice. You don't really need a crown reversal because it's a range, but it sure as heck wouldn't hurt getting that trap high above it. The most important thing, though, on this is let those buyers try once, let them try twice, and then we can sell it back down into that range. Again, because the market is bullish, right? Because the market is bullish, that bull market, if I want to sell, I let the buyers try once, buyers try twice, and then I can sell it back down into that range. Again, that'd be a nested pattern versus a straight failure pattern off of that low. I hope that makes sense, right? Because again, that momentum in the short term here, right, is bullish. So we go up. For me to want to sell it, one try for the buyers, two try for the buyers, right back down, right? We go down because we've got that bullish momentum. Moving average comes over, sellers try and fail. And again, oftentimes it's failure into pullback pattern, right? Sometimes it's failure into two-try trap pattern, right? To avoid trading inside of that trading range. Now, we talked about breakouts earlier. What's a breakout look like? A breakout going higher is a whole lot more attractive than a breakout going lower, right? Breakout higher, obviously. 1, 2, 3 breakout. Mark that high. Mark that new hidden channel. We're buying off the low of that hidden channel. And at this point now, plenty of space to stretch our legs as we go back up to that 1485 high. I like the idea of being a buyer, obviously, if we can get the right pattern, right? We don't want to try to buy a breakout. Want to wait for that 1, 2, right? That 1, 2 try breakout or that 1, 2, 3 breakout pattern. Mark the highs, mark the lows, buying off that low and getting that runner going higher. Now, as we try to go lower here, it's very important you realize where we are, because as we try to go lower, we have that big major low at that 1453.1. So as we try to go lower, there's a lot of support down here. I've got that measured move. That's going to be a big support level. I've got that major low at 1453. The moral of the story is, if we do get this thing breaking down, right? If we really get that 1, 2, 3, I'll probably be able to get one entry off that high. But be very, very careful, though, as we go lower, not to chase this down into that 1453 area, because you know what's going to happen down there. A lot of profit taking from the sellers, a lot of buyers coming in and trying to poke this thing back up into that trading range. There's a lot more open space for us as we go higher, but if we do go lower here on a 1, 2, 3 breakdown, mark up that low, mark up that low, find that hidden channel high, and we're selling off the top of that hidden channel high. 1, 2, 3 breakout, or in this case, a 1, 2, 3 reversal into a hidden channel pullback. And again, if we just make that run lower, I'm still looking for that seller failure and back up into that trading range. Get to those trades early tomorrow on gold. Buy low, sell high, respect the momentum. And again, if you're here for the first time today right now, make sure you grab that free course that I mentioned earlier, because that will teach you the fundamentals of all these setups. So when I talk about a crown reversal or a 2-try trap or a nested failure, you'll know exactly what I'm talking about and the right market conditions, right? You want to be trading those. And don't forget, tomorrow morning and every morning, Monday through Friday, we get together in our trade room and we do it all together. You know, learning how to trade, it's a performance skill. You can't just read a book about trading or watch a bunch of YouTube videos and become a great trader. You've really got to go out there and apply what you've learned. And there's no better place to go out and learn it and apply it than doing it right there with me every morning at the opening bell. Everything you need is all wrapped into our advanced course here at School of Trade. There's a video right on our website that will walk you through the entire process of what's included and how to get registered. If you're on YouTube right now, I'll put all the links that you need in the YouTube description. So check out the description of the YouTube video if you're on YouTube right now. If you're on the blog right now at sidewaysmarkets.com, check that big blue button right below the video tonight on the trading blog, or head over here to schooloftrade.com. Join as an advanced course member. That'll give you all access, lifetime membership to our trade room, our ongoing support, all the video courses, right? Everybody loves this membership. I think you will as well. Learn more on our website. Again, all the links in the description of the YouTube video. And don't forget, if you have any questions, pick up the phone, give me a call. I'm always here standing by to answer all the questions. And if phone call doesn't fit for you, use that live support tool, right, which is all over our website. You can always ring me here in the office via that live support tool. Guys and gals, tomorrow, Fed Day tomorrow, right? Get some big news early. Looking forward to a great day tomorrow in our trade room. I apologize once again. I will not be here with you guys tomorrow evening, right? But I'll make sure I wear my seatbelt. Get my hands on 10 and 2. I'll be back to see you guys tomorrow, not tomorrow night, but Thursday evening on the next edition of our newsletter. And again, we'll be in our trade room the rest of the week here like clockwork, 8 o'clock Eastern time. Hope to see you guys there. Keep in touch. Get registered for tomorrow. If I don't see you guys tomorrow morning at the opening bell, I will see you guys in the next edition of this video newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.